Hi everyone. Today let's start off by looking at some market data, as well as the fear and greed charts, and of course the economic data coming up next week. Then we'll look at the charts, as well as my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So historically, September is one of the worst months of the year for markets. You can see so far we're down 1%. It's living up to its name at least a little bit. But the question is what's going to happen after September? You can see here 1 September down to 8 September. We have moved down quite a bit on the S&P 500. But they mention here that the performance for the 3 months following the close on September the 8th have been among the best returns over a 3-month period throughout the year, where the S&Ps typically gain an average of 4.65%. So some of the best trading of the year could be coming up over the next 3 months, and it is something to pay attention to as traders as we move into the October, November, December timeframe. Moving over to fear and greed, really we have not moved very much. We're still at the neutral level. A week ago we were in a little bit of greed, but we've moved down. Momentum, still in greed. Stock price strength, starting to get into fear, definitely interesting. Breadth, also in fear. We've been talking about that on the charts as a potential area for reversal. On the stocks below their 50-day average, we'll definitely talk about that again later in the charts. Put-call ratio getting a little bit elevated, definitely dipping into fear. Volatility still in this same range we've been in, not doing much of anything. And then safe haven demand's been in fear for a while. And then junk bond demand still in extreme greed, which is interesting. Moving over to the economic calendar, Monday, just the 3-year auction, not very interesting. Looking at Tuesday, 10-year auction, that should be interesting, as well as the federal budget balance. Wednesday is the big one for the week. We have core and headline CPI that will obviously have a massive impact and will help us determine if the Fed is going to hike at their next meeting. Current expectations, core CPI expected to step down significantly from the previous read. Month over month stays flat. Headline expected to step up quite a lot from 0.2 to 0.6 on the month over month. And then headline year over year, 3.2 to 3.6. And I would guess most of that is based on energy prices. Looking at Thursday, we have core PPI, retail sales, headline PPI, definitely interesting. Retail sales month over month. Headline number also going to be interesting. Moving over to Friday, we got the Michigan numbers coming out, 5-year inflation expectations, consumer sentiment, all of the interesting ones at 10 o'clock. Moving over to max pain for this week. This is a massive week. You can see the amount of options in the market already, 4.3 million, absolutely massive. Max pain sitting at 440. So we could be looking at about a 1% move, maybe a little bit more than a 1% move if we get a max pain finish. Definitely interesting. Big put wall here at 440. You wouldn't expect to get too much lower than that. First call wall is at 450. So we're looking at that for a range right now. And we are basically in the middle of that range. So if we get a close down to max pain, that would be a push lower towards this little dip in here. Wouldn't be that much different if we saw a little bit of a rally, but I wouldn't expect above a 450 number. Again, we'll continue to watch this all week. This is a massive one for the options expiration. You can see just how many there are. This 400 put sitting at 117,000, massive number of puts here. Obviously, that would be more than a 10% down move. I don't expect that to happen either. 430, also a big put wall, but 440 seems like the most relevant here in the short term. Moving over to the charts, looking at the SPY here on the weekly chart, you can see we got an inside candle. Typically not what you would want to see if we were going to get a bullish move. We're still sitting basically on top of VWAP here. You can see 447.50. VWAP is currently 457.90, so we're basically right on top of it, just below the 9 EMA, but still sitting well above the 21 EMA. We hit this trend line this week, continues to hold. We have another trend sitting down at 43.94. Could absolutely see an overthrow of that 440 level, hit the trend support, and then rally into that max pain for the end of the week. Seems interesting. Momentum bearish. RSI definitely bearish. Not a ton of volume this last week. And looking at structure, you do have to entertain this now as a high, lower high setup, looking for a little bit of follow through into that max pain area. Moving over to the SPY on the daily chart, you can see that wick we got on Friday after seeing a big move down on that Tuesday, Wednesday, Thursday move. Found a little bit of support on Thursday, threw a wick to the upside, and now we're kind of neutralized in that 445 area. We are still technically just above support by 3 cents. And this could absolutely be an initial test of that high, rally into the zone, and then we get that bigger breakdown. So daily and weekly charts kind of showing a little bit of conflicting data, but you do have to pay attention to both. Momentum currently showing that we're going to break down further. Again, volume not really supporting to the upside on that bullish day. And then if RSI breaks below the SMA here, that would be another good indicator to the downside. Moving over to the NASDAQ, bearish momentum, RSI definitely looks like a rally rejection, lower high setup. We're still sitting right at the 9 EMA, just barely above it. If that breaks down on the weekly chart, then you would expect to hit this trend, potentially break down that, and move down to the 21, sitting at 14,650, which would be about a 4% down move. Doesn't mean that it's going to happen all in 1 week, but it is something worth paying attention to. We didn't quite get there on this last 3-bar down move. Now we got the retracement, and you would expect that inside candle to get the continuation to the downside, in my opinion. Moving over to the daily chart, very similar to the SPY in terms of a setup. Hit that 55 EMA here on the daily chart, rallied up, could not hold above 372.85 on that last candle of the week. Momentum still stepping down, and based on that, it looks like a retest of the 9-day moving average, and I would expect a further breakdown based on momentum and RSI. Similar to the SPY, everything looks pretty weak in my opinion. If we do get that breakdown in the 21 and VWAP end up holding down around 367.63, that could be an interesting opportunity, more like a double bottom setup. After this lower high breakdown, that could be interesting, another higher low based on this, and then we're kind of wedging in here. Absolutely a possibility as well, but either way, I would expect a retest of that area. Moving over to the Russell 2000 on the weekly chart, we did get a flip to bearish momentum, not a great sign to the downside. If it takes out this 183.28 level, you still have the 55 EMA on the weekly sitting at 181.80, but realistically I would expect that level to break and start to see a push back down to these previous lows around 172.60. That seems like the most likely case. Breakdown, retracement, retest in the 9-week moving average, and then we got the continuation lower here, and you can see we basically closed on the lows, which in my opinion means we're going to get some more follow through to the downside. Moving over to the daily chart, it is worth noting that we have the 144 and the 200 SMAs sitting right behind that 183.28 level. Hit that the first time, rallied from there. Strong wick rejection, island reversal back down into this level. If it holds, could be a good setup. The Russell has done things like this before. Rally up, break down, rally up again, retest that same area, and then get a continuation higher. Certainly possible. But critical level here, if this breaks, then we're looking for a bigger down move for sure. If it holds, decent level to trade off of. Moving over to the Dow on the weekly chart, you can see we did have a bearish candle, but this trend is still very bullish. We still have all the EMAs in line on the weekly chart. We're still right at VWAP here. Momentum is bearish, RSI breaking down from the SMA, so that's not a great sign. But we're not seeing volume pick up as we move lower. Still holding above that 21. Could absolutely see like a retest of that area. Maybe even get all the way down to this highly traded zone around 338.31. You could still argue that this is a lower high setup after we had pretty consistent higher highs for a while. But based on momentum and RSI and the current bearish candle, I would expect at least a short-term move lower next week. Moving over to the daily chart, you can see we tested an absolute critical level here at that 347 area. We got the 9, 21, 55 EMAs as well as VWAP, basically all within 50 cents of each other right here at that level. If it breaks above here, holds, and then continues on up to this previous high, that would absolutely be a possible setup. But if it rejects from this key area, then you should be expecting a bigger move lower, probably going to take out this previous low, push down to that 339, 338 area. And you got the 200 SMA on the daily chart sitting at 338 as well. So definitely would be an interesting area. You can see we bottomed out here last time after getting some chop before ultimately getting the continuation higher. So definitely an important level if this area breaks down. Moving over to the equal weighted S&Ps here on the weekly chart. This looks most like the Russell 2000 in my opinion. You can see hit that 9-week moving average 2 weeks ago, broke down from that level, fully engulfed. We are at this trend that I've been watching, which is interesting. But if that level breaks as well as the highly traded zone, you should expect a much bigger down move. Could be something like this where we broke down, got a reversal, then we got that continuation lower, an absolute massive down move, something like that absolutely seems feasible. Bearish momentum, RSI, retest of the SMA, breaking down. Everything looks a little bit bearish. It is still a technical uptrend. You do have to respect the trend a little bit. We still have the 9 above the 21, above the 144. The 144 is above the 55, so we don't have everything in line. It is still a little bit mixed, but price action definitely looks bearish. Looking at the daily on the equal weighted just for a moment, you can see that highly traded zone that we talked about as well as the trend. Below that, you still have the 200 SMA at 146.43. Bearish momentum, RSI below the SMA. It is kind of starting to curl up at that level, which is interesting. Maybe we get a slight continuation down test and then a reversal. EMA is doing some weird stuff here where you have the 9 EMA continuing flat as price is lower. The 9 EMA is also above the 21, which is interesting based on this previous up move, but the 21 is still trending downwards, and that would be a clear resistance at 148.68. Moving over to the ratios just for a moment on the weekly chart, you can see we broke out on both of these. I was kind of expecting these areas to hold and see some Russell outperformance, which is not what we ended up getting this week. You can see the NASDAQ breaking out against the Russell. Similarly, the NASDAQ closing on its high, looking to push up to 242. Momentum on both of these pushing higher. Definitely looks like we're looking at some NASDAQ outperformance and some Russell underperformance in the next week. Moving over to SPX divided by the M2 money supply, you can see we are still chopping in this top range just like we did at the previous high. Chopping in the zone for a couple of weeks, get a final retest of that level at 22.06 before we got the big breakdown for basically all of 2022. And it does seem like that's kind of happening again here. Rallied up, got the initial test, broke down, chopping in this area, probably going to get at least one more retest, then we get a bigger breakdown. Remember, this can take weeks, so that initial breakdown like we had here, and then after that, we chopped in this area for about another 5 weeks. And right now, this is only the third week, so we could get another 2 weeks of chop in here. Could go even longer. It doesn't necessarily have to be exactly like this previous iteration, but even based on that, you would expect more chop in this same zone, potentially break down this trend sometime in October, and then you could see a bigger breakdown. That would be interesting. Last week, we talked about the potential of this breaking out as well. Absolutely could go higher. There are some levels up here which are interesting. These levels go all the way back to the dot-com breakout, which ended up being the massive dot-com bubble, meaning that if we break out above this area, I wouldn't consider it a new paradigm or something to invest in, but for a trader, it could absolutely be a monumental run if we did break above this level and end up holding. You can see it's very clear resistance, COVID high, all-time high, current high, very important level. Like I said, I still expect it to break down, but if it breaks out, which is a possibility, definitely worth paying attention to. Moving over to Apple and Tesla. Apple, massive breakdown on their news with China, massive volume. Everything looks super bearish here, big engulfing candle. It's right on top of that highly traded zone. You can see it right there, tested these previous lows. If this continues to break down, you can see this previous rally, not very much volume in this area. If it gets below that 170.90 level, I would expect this to break down quite dramatically. Some volume at 165, and then even below there, you really don't see a ton of volume until you get to this previous chop down around 150. Absolutely would be a massive move lower for Apple, and of course that will affect the major indices as well. Tesla throwing some wicks to VWAP as well as that 255.44 level, which continues to hold, and right now I would expect that to reject from that level based on those wicks as well as the 9 EMA. Momentum did step down a little bit, not really much to trade off of there, but right now looks like a down move, retrace, and I would expect a breakdown from there. Moving over to Staples on the weekly chart. Staples has been abysmal. You can see we've been chopping in the zone for a while. Now we set up a lower high. We took out this midpoint and we're breaking down. We did talk about how on the shorter time frames on this wick, we did find a little bit of support in this area. You can see it's been a level where we have found support before. We didn't get all the way down to my 70.85 level, which is not reassuring. Momentum still bearish, RSI still moving lower, not what you would want to see. This is still definitely a falling knife. We haven't seen any kind of bullishness on the weekly chart. And if this continues to break down, that's going to be pretty interesting considering that the major indices look bearish and we're not quite seeing that flight to safety quite yet. Discretionaries testing that 170.68 level, and I would expect that to break down from there, just like we saw on Tesla. Moving over to breadth on the daily charts just for a moment, I wanted to highlight the fact that we do have divergence. You can see the 200-day average moving lower, 50-day average still holding a higher low. And you can see that just a little bit on the weekly charts as well, still holding above that 32.22 level. 200-day average continues to break down, not reassuring. Momentum on both, still bearish. RSI on both, still bearish. So it doesn't mean anything's going to happen immediately, but it is interesting to see a little bit of divergence setting up going into the next week. Moving over to the dollar on the weekly chart. Last week we talked about how this candle could be a launching pad. Big move down, test of that 21 EMA area. Extending out this trend line here, you can see we tested that as well. And then we rallied above the 55 EMA and we closed above it. So this is absolutely still looking very bullish here on the dollar. Definitely interesting. If it gets above that 105.50 level, there is not a ton of volume in this area. You can see we broke above this level, came back, retested here in August of 22, and then we ended up rallying all the way to those October of 22 highs. So as the dollar was getting super aggressive, equities were getting super weak. And once again, we're seeing the dollar get into this same area where we had that August high, which was very bearish after getting into that zone. And if this continues to show a lot of strength, pushing back into these previous highs, that could absolutely be bearish for markets. Moving over to the VIX on the weekly chart, we got an inside candle. We got a retest of that 21 and 9 EMAs. Momentum still rolling towards bearish. Not really showing us much of anything. We did find some support at the SMA on the RSI. Definitely interesting. It was a pretty weak bounce, which is typically not what you would want to see. You want to see this kind of spike higher if it's going to do it. Fairly interesting. Still a bullish week after the big bearish week that we had the previous week. No clear direction, still holding in this previous zone, but it is interesting to see. Moving over to my accounts, you can see that Russell position did get executed, so I don't have any Russell shares going into the Monday session. I still have my Q shares with the covered call at 371 for Monday. I also have some calls at 374 and a small profit, and some calls here at 369 and a small profit as well. So basically a strangle, as well as those covered calls going into Monday. And like I said on the charts, I really feel like this could go either way, whether we get a short-term rally or dip early in the week and then follow through into that max pain because there are so many options this week. Right now, just looking to collect as much credit as possible. Basically neutral. You can see my deltas are almost zero. Let me know down in the comments section what you thought of the data for September. Are we going to see a follow through into the last 3 months of the year, or are we going to see a breakdown of the economy and a move much lower? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.